All right, Soleil, welcome to Proof of Thought podcast. So happy to have you here with us.
Yeah, this is awesome. I've been looking forward to it ever since we had that conversation in New York, uh, and and really just kind of got into the in depths of Bitcoin and even a little stuff that's a little out there. I really like those kind of conversations. So been looking forward to this.
Absolutely, this should be fun. And wanted to start off. It's always great to give some context, hear a little bit more about your background to level set. You have a very fascinating story, obviously, and I love as I looked more into the strategy that you've been employing with, trading options and how you've been able to use that to help fund and facilitate retirement. Would love to start off there, hear a little bit more about that. Essentially, you started trading, just for some context here for the audience, you started trading options in 2020. Before that, you were already a strong Bitcoin believer. I had to wear my shirt today. And eventually, you combine those two worlds through MicroStrategy by selling MSTR options in a way that allowed you to, I think, retire about a year ago. Congratulations on that.
Yeah,
And
appreciate
now,
it.
yeah, now you're able to, continue to use that those strategies to fund your lifestyle. And so, just to set the context, can you help walk us through your journey and give us a brief overview of your background, both academically, professionally, and then walk us through your Bitcoin aha moment and what pulled you into options trading and how you ultimately, brought those two different worlds together to fuel your early retirement.
Yeah, I'll probably be dating myself by saying that I kind of got hooked into this through some people that I met on Facebook. I've long since quit that dumpster
I thought
fire
you
of an
might say
app.
MySpace, but
Yeah, I know, right? That would be really bad. Um, but yeah, it reminded me of when you saw my Yahoo email address. You're like, okay, that's
I
cute.
forgot about that.
Yeah,
Yeah, that's funny.
and yeah, so it was a couple of like radical libertarian anarchist types that I met on there, and one of them was kind of like a tax haven kind of guy. And so we were working together, and he's like, "Hey, look, all of my clients are going to start trading options." And I'm like, "Are you out of your freaking mind? Like, I don't know anything about this." But he started a trading club on Clubhouse, and I still had my regular job. So like, the market would open and I'm like in meetings doing my thing and they're all just meeting, and they were more momentum traders. And so, I mean, that was cool and all, but that's really big swings, and you really have to like strike out 9 out of 10 times before you hit a home run. And so that really didn't appeal to me too much. And so I just started teaching myself options, a YouTube university, right? I probably would walk the dog, and I had two dogs back then, but walking the dog an hour or two and just plowing through option tutorials at 2x speed. And I must have listened to 1,000 hours of this stuff. And what really started to appeal to me was, instead of like the YOLOing the long stuff, is taking more of a less directional bet, which is what the option sellers are doing. And I'm a little bit of a Tasty Trade disciple. There's a guy, he just left Tasty Trade, but his name's Tom Sosnoff. He's kind of legendary in the option seller space, and the reason that he gives for being willing to limit your upside in order to take some, guaranteed weekly or maybe monthly profits, is you want to lower your cost basis for an increased chance of success. And that really appealed to me, because if you're not going to do all this due diligence and figure out which companies are going up and which companies are going down, you're just kind of, how does it go at the poker table? If you don't know who the fish is, if you don't know who the sucker is, it's you. And so if you're not going to like develop all of that knowledge and figure out how to evaluate companies and do, valuation models 10 years in the future, that's like a lot of time and effort. And any investor can just give themselves a little bit of an edge if they just lower their cost basis. So being an option seller instead of a buyer really appealed to me. And it's very non-directional, right? So if your stock goes down a little bit or goes up a little bit, you kind of just don't really care, because you're scalping these weekly or monthly premiums. But then, like you said, the Bitcoin aspect got a hold of me, because before that, I really couldn't imagine why anybody would be bullish or bearish at all. Like, other than the fact that the stock market goes up over the last 100 years, more than it goes down, right? It has some crashes, but it always rebounds. So other than being slightly bullish, it was kind of like, why would I even think a particular stock is going to go up? Because the market's irrational. And there's a book called Trade the Trader, and he said that he had this thesis all set up, and it was like this grocery store company. They were just ready to go to the moon. They were undervalued, all this stuff. He was correct about everything, but the market just doesn't care. And so the stock never went anywhere, and he lost a bunch of money. So you can't really just assume that you're going to be able to convince the market to believe you, even if you're right. So I never really understood that until I started thinking about, okay, I'm a Bitcoin maxi now, and if I believe the Michael Saylor quote, it's going up forever, Laura, then I can finally be bullish about something. And it's not necessarily a direct correlation, but I thought, okay, well, if Bitcoin's going up forever and there are these companies that are buying Bitcoin, well, then at least something that they own is guaranteed to go up forever. And so that was what really changed my mindset from strategy being a pure premium play. Because if you compare strategies, premiums that you can collect selling options compared to almost anything else over a long period of time, it's night and day. Like if you just look and see what premiums you can collect on Apple, it's pretty sad, right? It's a pretty bleak option selling environment. But these Bitcoin treasury companies inherit the volatility from Bitcoin. And that was what the first thing that I was like, okay, I can finally be bullish on something. And so I decided, okay, strategy is disrupting the space, and they're also the clear winner. So that was what basically turned me from a non-directional player to I'm really going to put a lot of chips on the table and bet that this stock price goes up.
Yeah, and I'm curious, when was the moment, or what was going on? What was your thought process when you realized, selling these premiums wasn't just like this interesting side hustle, but could actually replace your income, or as you put it in some of your videos, become your own business.
Yeah. So what finally hit me with that one, and I've covered it in a couple of episodes, but um, I call it reaching critical mass. And it's not going to really work with a small account, but if you can get your account up to a certain size, then the guaranteed premiums that you're collecting are enough to fund your lifestyle. And even if you like build in like a 75% drop in the price, if your account is still enough of a size to where a percentage of that weekly income is still enough for you to live, that was what got me to the point where I was like, you know what, I can actually just quit my job and retire. Because if you think about it like this, let's just say you've got a $10 stock, right? If you sell a covered call against it and you earn 1% of that premium, you're only going to get $10, right? $10 is only enough to buy one share. So it's not like you can do compound interest. You know what I mean? Like normally if you put money in a savings account, you get 1%, 5%, whatever. And then next month you get 1% on your 1%. And then next month you get 1% on your 1%. So if your account's so small that you can only afford, 100 shares of a $10 stock, you're not really compounding, because you're going to have to, next week you'll get $10 and another week you'll get $10, another week you'll get $10. After 100 weeks, you've got enough to buy another 100 shares. So your account basically has to be big enough to where the premium that you collect is enough to go right out and buy another 100 shares of something. And once you do that, your returns are not additive. They're multiplicative, right? They're starting to become exponential returns. And that's why I call it reaching critical mass. Once your account reaches a certain size and as far as I can tell, it's probably like the stocks too far under $10 a share. If they crash 50%, now they're $5 a share, and it's really hard to squeeze premium out of something that's that small.
Why don't we
So
take MicroStrategy as an
yeah, go
example? It's
ahead.
early January 2026. The stock's at about 160. Again, you need 100 shares in order to sell these call options again. So, what would you say is like needed in terms of capital to have critical mass today?
Yeah. So I got to work it from reverse. So obviously, it's going to be real hard if you want to buy 100 shares of strategy a week. You'd end up having to have what 10,000 shares of it if you were getting 1%. Um, so I would probably use something like strategy or Tesla to generate the larger portion of the premium. And then if I can earn $1,000 in premium, then I would buy a $10 stock with that. And that way you're using the more expensive stocks to buy the less expensive. So we're going to have to kind of like reverse engineer that. So if you need to come up with $1,000 of premium, and let's just say I'm collecting 1%, well, now we have to take that $1,000 times 100. So you could probably get there with about 100 grand to reach exponential returns. A lot of the TradFi investors, when you start you start saying, "Oh, well, I can collect 1% a week." They're like, "Okay, you're obviously a grifter." You know what I mean? Because this is just insane. Like 50% returns per year is,
It's
ridiculous.
like,
If you need
where's the
1%,
risk?
yeah, exactly. And there is, but at the same time, once you become a Bitcoiner and you've gone through a cycle or two and you've just got diamond hands, you just don't care anymore.
Right,
Um,
right.
there's this really good options seller. His name is Carl Dom, I believe, and his channel is called Real P&L. And his channel was actually the inspiration for why I wanted to just trade online with complete transparency, right? So like every once in a while, something will happen and I'll be like, oh, I have to trade on my phone waiting for a doctor's appointment or something. But I would literally say 99.9% of every single trade I've made over the last 2 years has been documented. And he's one of the only people that seem like they actually sell legit courses and are not scammers. Um, there's a kind of a rough environment. It's kind of like the Wild West in the option selling space. People will post all of their wins, but won't show you their losses. And this guy actually even got covered by CoffeeZilla. CoffeeZilla was trying to expose some of these guys. And he came across this guy and he was like, oh, wow, this guy seems to be actually pretty legit. But one of the things that Carl will say that is a huge pitfall for option sellers is the same pitfall for someone who just buys a stock and then it goes down 50%. Like, what are you going to do now? You're kind of screwed, right? You're just bag holding, waiting for it to come back. But like I said, as a Bitcoiner, if you believe it's going up forever, Laura, then you're not really just wondering if it's going to come back. You know it's going to come back. And so it gives me that little bit of extra confidence that even if, strategy is trading at 500 and then, a year later it's trading at whatever the hell it is right now, sub 200s, it kind of just doesn't matter as long as World War III doesn't happen, right? So,
Yeah,
uh,
and if that happens, we have bigger problems anyway, and it's affecting any company you would have chosen to do it with too. So
exactly. And I go off on tangents, so I'm not even sure if I answered your question.
no, no, that's you did. That's very helpful in terms of when one would be able to get critical mass. And curious here, and it actually doesn't seem like it, but still want to ask: was there ever a period early on where things weren't working out, and you thought about quitting, and sort of how did you navigate that?
Oh yeah, I don't know that I ever thought about quitting, but I have had to dust myself off a couple of times, and I've covered this occasionally as well. So, what was it? May 2020, started trading and was making a bunch of money, but it was like everybody was making money. You know what I mean? As long as you didn't panic sell at the
Was that
bottom.
2025 or
No, I'm sorry, 2020. So after COVID
2020?
hit,
Okay,
right? So
gotcha.
everybody got screwed because their
Right.
retirements went down, whatever, 30%. But as long as you didn't panic sell and you left your money riding, you made it all back plus some, right? But I was making more money than the S&P 500, so I'm like, okay, I'm outperforming here, and but was still kind of nervous. Like, am I just getting lucky? Because if everyone is making money, maybe it's just easy right now. You know what I mean? And that ended up being true because what I started doing is I don't know, you get yourself into a little false sense of security. It was like this money is, I'm just keep selling options, I'm making money. But then you like, okay, well, how do I make even more money? And so you start taking a little bit more risk.
Yeah.
And so what I started doing, instead of just, it's called running the wheel. So you can sell a cash secured put. You do that until you're forced to buy 100 shares. Then you can turn around, sell a covered call until you're forced to give up those shares, hopefully at a profit. And that was doing well, but I thought, okay, well, how can I make this even more capital efficient? And I discovered something called a poor man's covered call. And so
Mm.
what you can do is you can buy a leaps, right? And then for maybe half the price of 100 shares, you could get this leaps. You can sell a covered call against it if you structure it correctly. Um, and so you can you can get 2 covered calls for the same price of one. So I'm like, okay, cool. Let's just do that, right? I'm making twice as much premium
Yeah.
per week now. And what I didn't realize is I think was the end of 2022, the Fed started to raise rates.
Beginning of 2022, end of
Okay.
2021.
So yeah, so I was making money hand over fist for like a year and a half, but then I started getting into these riskier plays, right? And just assumed it was just going to keep going up forever. And I had a bunch of poor man's covered calls in Tesla, and of course it topped at around 400 a share, and it bottomed at 100 a share. And if you're a diamond hands shareholder, that's fine. You can just wait. But if you have leaps that have expiration dates, you can't just diamond hands. No, once you buy an option, now you're locked into this contract that has an expiration date and you're on a clock. And
Right.
so you
Right.
can't just like say, okay, I have a 5-10 year thesis on this thing and I'll just diamond hands through it. I have to win by whatever your expiration date is. And so in short order, all the money that I made in like a year and a half was gone in 3 to 6 months. And so I was right back where I started. Like I wasn't below where I started, but I was like, holy crap, like I gave it all back to the casino, you know what I mean? Kind of
Right.
thing.
Right.
And so I think that was the lesson, is that once you started getting a little bit too comfortable, you might want to take some money off the table or de-risk or something. Like whatever you're doing that is leveraged, take the margin off the table, take the leaps off the table. Just, you can go down to shares or you can go to straight spot Bitcoin and you can hodl forever and you'll be fine. But that was the main lesson, is that, and really I should have known better, because one of the things that they stress in all of the Tasty Trade videos is the number one enemy of an option trader is position size. So if there's any one position that can sink your battleship, you have to rethink that. And I probably had 75% of my portfolio in these Tesla, poor man's covered calls. And if the spot position drops 50%, your leverage position is going to drop 75, 80%. And
Yeah.
it was mind blowing how fast your portfolio can
It's,
crater
yeah.
using leverage. So I think that's the number one lesson learned there.
Yeah, no, I think those are some great takeaways. And I'm also wondering if you now have any strategies or sort of guardrails in place, and how you would think about, not letting that those thoughts of, how do I generate even more? How do I use even more leverage? Because I think it's so natural, and I think so many people who get into trading go through that phase. But now that you've been running your strategy for a while, it works really well. It's something that's repeatable. It's a system. But how do you still guard against, not making a similar mistake in the future?
Yeah, that's an excellent question. And I'm probably still trying to deal with it because I'm using some margin now. After November 2024, I exited all of my margin positions, and I took some of Mike's advice, grain of salt, and it's the only actual advice that he's ever given that's not followed by, this is not financial advice. And the advice is that whenever you have life-changing money, take 20% off the top and just set it aside, treat your family to something nice, put some aside to pay your freaking taxes, because you're gonna, that it, I'm an anarchist, so I don't agree that taxes should even exist. However, I do pay them because I like to not be in jail, right? Um, so set the money aside, pay your taxes, all that good stuff, and yeah, that's kind of like the one thing that I think is super critical, is that especially when that euphoria is hitting and you're like, okay, I made a bunch of money on the 800 strikes, so let me buy the 1080s, right? And then at some point the mania fades
Hmm.
and it just doesn't work anymore. So um, you kind of have to take that leverage off the table, especially when you're winning. That's when it's like it's super tempting to double down when you have to kind of take some off.
Hmm. No, that makes sense. And it might even be great to have a partner or a group of people. I know you're part of MS True North, MSTR True North. Where you can kind of keep each other in check. As things are going. Are things getting a little toppy here? Should we be pulling back? It could be a little bit more challenging to do when you're just in a silo by yourself. So, and kind of to circle back to something we were talking about earlier, just to make this, you know more relatable or practical for folks. I'm curious for you, when you were starting out, did you start out with critical mass? How much capital did you actually have when you were starting to run the covered call strategy with MicroStrategy? And also, why do you think more people don't follow it if it works so well, and is systematic as we've talked about, and something that could actually produce life-changing returns in terms of selling the options? I know it's not as sexy as buying options or owning leaps and going up 500% in a short amount of time, but in terms of long term, medium term success, being able to potentially free you financially if you have decent amount of starting capital, it's something that could work really well. And you've even pointed out different ways you can sort of hack it in terms of working with a bank to borrow some funds, obviously doing that in a very responsible way. But two questions there, I guess. One, how much did you start out with? Did you have critical mass when you started? And then two, why do you think more people don't follow this strategy?
Yeah, those are awesome questions. But before that, something you said sparked something in me. When you were talking about having the guys around you, if you don't have a group, right? Um, all new investors should have a trade journal. So if you go to the platform, obviously you're going to be able to look at your trade history, but the context is missing. So you don't remember what your thought process was when you took that position, and then you want to follow that trade to its ending, and did you make money? And then the answer to the question of whether you made money or not isn't really like, okay, if I made money that was correct, or if I lost money that was incorrect, because you can do the right thing and still lose a trade. You can do the wrong thing and win a trade. So you have to be very careful that you're evaluating that trade. Like, did I implement the correct strategy? I said I was going to do this, I did it, or did I fail to do that, but got lucky and won? I think one of the most dangerous things in the world is to make a stupid bet and win, because then you think that's normal. And then you do it again, and you do it again, and you do it again, and you lose 10 times more than you would have if you had just lost the first time you tried it and then never tried it again. Um, so I I really wanted to get that out there, because as soon as you were talking about it, I was like, that's a I think a
No,
really
that's
important
great.
piece for
That's
new
a great
traders.
point.
But then, so did I start with critical mass? No. So I took out like a couple of grand, right? Because I was like super terrified. And the first trade that I made, I think, was on something just completely ridiculous, like Hertz rent a car, right? And I thought, well, it was like a penny stock. It's under $1, right? And the implied vol was high though, and I'm like, oh, I can get a bunch of premium off of this thing. So I sell like a cash secured put or something against it, and I collect on, it was only a few cents of premium, but like compared to the $75 I had to put up, it was kind of a lot of money. And then as I did a little bit of research, and I was like, oh, they have high implied vol because they're in bankruptcy talks. So this is like the dumbest thing that you could possibly do. I think they ended up not going bankrupt. So, but yeah, I mean, the contract only lasted a couple of weeks anyway, and I could just exit that trade, and it was only like a $10 lesson learned there. But no, so I started out really small, but after doing a couple of dumb things like that, and starting to learn as I'm listening to all these tasty trade videos, and there's another guy who was formative in my learning. Um, his channel is called In the Money, and he's a very good option seller as well, and his teaching style really appealed to me. So between um, those two folks, tasty trade videos and this guy In the Money, that would say that's like where I got 90% of my trading knowledge, I guess. And yeah, so once I got a little bit of confidence after a couple of months, I was like, all right, I'm ready to start trading all my own money, right? It kind of felt like easy mode. And I went ahead and got my IRA out. And I was like, okay, I just want it. I paid the 10% penalty and everything just to get my own money out. I think I started with like 70 grand. Um, and then as I was telling you, it was like easy mode, right? So after about a year and a half, I had turned the 70 into about 240. And I was like, holy shit, I'm like the best trader that has ever lived. You know what I mean? And then of course I turned in, what did I say, 3 to 6 months, I turned the 240 back into 70, right? And I was like, oh crap, this
And,
sucks.
and just clarify, from the 70 to 240, was that through the covered strategy, or was that through a mix of, some longer term options as well? I know you mentioned later you started to run the poor man's covered call strategy. So that's, having some leaps in there, but getting from 70 to 240, what was the primary strategy there?
For the first 6 to 12 months, it was probably all just running the wheel, just straight
Mhm.
buying shares, selling covered calls, selling cash secured puts. Um, but then it was like, okay, maybe the last 6 months or so, I really just started getting addicted to the easy money of buying the leverage and selling covered calls against the leaps. And so the mix started to trend, right? Like first I have like 10% of my portfolios, performance covered calls. And then it's like 20, and then it's 30, and then it's 40, and then 70. I'm like, oh, I'm still making money. And then it was all of a sudden, it was like, oh crap. I'm stuck in these things as the price is cratering. And since I don't have experience with macro, like it didn't occur to me that the Fed is going to lower interest rates and the whole market is just going to go into the toilet. Like it didn't occur to me that it would happen so fast that I wouldn't be able to, make some money on the way down and kind of shield myself from whatever was going to happen. Um, yeah, so I started out with about 70, made a bunch of money, lost it all, and then kind of dusted myself off and went back to a more um, straight covered call strategy. Very diversified as far as like, not for the sake of diversification, but I would just go to the websites that listed companies implied vol and I would just trade whatever. I would trade whatever was giving a ton of premium and really just didn't care about the company itself. I'm not doing like market research or any of that stuff. It's kind of like it was hard enough to just dig through and find things that were paying premiums. But it was probably Quant Bros 1 when I saw Jeff and Ryan talking about strategy, and I was like, holy crap, I'm a Bitcoiner. This is built on Bitcoin, and this is going to be unstoppable. Um, and yeah, so at that point, once I was like, okay, I'm a laser-eyed maxi. If you talk to some laser-eyed maxis, they'll call you a shitcoiner even for dealing with Bitcoin treasury companies. And so I have a little bit of a like, you know, you're a little bit nervous, right? Because you want to be the pure Bitcoiner. And so I try to stick to the companies that are also pure Bitcoiners so that it doesn't feel like getting too far away from the Bitcoin philosophy. And I think that's probably okay for now, but it's always something that is kind of like over my shoulder, wondering like, am I am I still participating in the fiat system, or are Bitcoin treasury companies Bitcoin enough, right? Are as long as the company's laser eyed, is that good enough to like I can sleep at night knowing that I'm not feeding the system that Bitcoin is competing with, kind of thing. So I think I answered part one of the question, but I don't remember what part two was.
No, yeah, you got it there. I was just wondering, why do you think there aren't more people who
Oh
follow
yeah,
the covered call and even cash secured put
yeah.
strategy?
Why don't more people like it? So there's a common theme that I think a lot of people will criticize the strategy for, and the people will say, well, you're picking up pennies in front of a steamroller, or it works until it doesn't. And those criticisms are actually true in the sense that if your stock costs $100 a share and then it drops to 50, well, your cost basis is at 100. And if you sell a covered call now at a strike that you can actually get premium, let's just say 70 or 75, you can generate meaningful premium there. But if the price does run back up to 100, now you're taking a $25 a share loss because your shares are getting called away at 75. It's called bag holding. So you're basically stuck just holding this stock that may or may not ever go back up. And I think that's something that people struggle with. But if I go back to the critical mass theory, I guess, um, it's kind of like if you've gotten your account to the size where it can drop 50% and you can still support yourself, then I just ignore my cost basis. I just try to have no memory, because if you cling to what your cost basis is, you're ignoring that the market doesn't believe, like, you're not in the same reality as the market. The market says it's worth 50, it's 50. And so you can't just like have this emotional connection to the price you bought it, because then it's going to cause you to make decisions that will prevent you from making money in the future. And so I think that is one reason why uh, some people probably, maybe they try it, and if they put $10,000 down on 100 shares of something that's $100 a share, drops to 50 a share, and they're just like, nope, I'm done with this. Like, screw this, I'm out. Um, so, and it can go in the other direction too. So, um, you can be holding on to some shares that are worth 100, and you're selling the 125 strike, and then it goes to 250. And now you picked up pennies in front of a steamroller in the other direction. And somebody else that bought your call that you sold to them, they made a 10x on it. And you're like, oh, I got my little 10% call away value, but you're just kind of bitter, and like, it's hard to keep a level head when the price of your stock went way down and you're screwed, or the price of your stock went way up and you missed out on the home run. So there's a lot of emotional things to deal with this strategy, and if you're not prepared for that, if you're not prepared to hit singles every week and be on the sidelines when it hits a home run, if you're not prepared for that, then it can be a hard strategy to maintain.
No, for sure. Yeah. It's like you have to know what your strategy is and just be willing to stick with that and be okay with it, even though it's tough. Could be tough emotionally or psychologically. I'm curious about that down case though, because, like you're saying, don't pay you know, too much attention to that cost basis. But in the scenario that you gave, right, and it could even be more extreme than this, where stock drops 50%, would you continue to sell covered calls during that time period, or would you, want the stock to ride up a bit more closer to your cost basis so that it doesn't get called away from you way below your initial entry point?
Yeah, I just plow along and I pretend that the current price is the price I bought it at.
And you just assume you'll like make up for it over time.
Yeah,
Yeah.
over a long period of time, I think that it basically just averages itself out, and I don't really worry about it too much. It's much harder to think that way if you can only afford 100 shares of something, because once it gets called away, you're out of the game, right? I mean, you can go and find something else cheaper to trade, but if, like, you've got 100 shares of this stock and you like it's precious to you and you just love that company, then maybe selling covered calls against it is not the way to go. But if you've got 1,000 shares and you sell covered calls against them, and you're like, okay, I get screwed, I missed out on some upside, and 100 shares of the 1,000 get called away, you know, to me that just doesn't really bother me. So yeah, I just pretend like the current price is my cost basis, and occasionally, if my cost basis is 100 and they get called away at 75, that can happen. But the same thing is true for any position that you take, even if you're not selling options against them, right? You can just buy something for $100 a share and it goes to 50. Like, it's not unique to the option seller's perspective. It is unique that we have to put ourselves at risk for selling below that cost basis or get stuck bag holding. And I would say 99 times out of 100, I just refuse to bag hold.
Mhm. Gotcha. And I just want to highlight too, one of the other critical things I think you mentioned along your journey is that you found and understood how powerful this could be with MicroStrategy specifically, right? Because we believe Bitcoin. You did the homework to understand. Okay, Bitcoin's going up forever over time. MicroStrategy is so closely correlated with it, and this isn't necessarily true for all the treasury companies, but MicroStrategy seems to be the one that over time is proven will reliably give you about that 1.5x on the upside and the downside. So it's dependable, but also there's a lot of implied volatility because the underlying is Bitcoin, which has a lot of volatility itself, and now this has additional volatility. So you could still collect very juicy premiums like you might do with a stock like Tesla. But yeah, with another operating company like Tesla, it is the case that you don't necessarily know that it's going up forever. So something's like it's almost like having MicroStrategy company like that is the really the key here to like kind of like fill that final critical thing that you needed, which was knowing that the company will continue to go up. And so it's almost like this special moment or special period. And I sometimes wonder like how long that'll last. I think we believe over time, MicroStrategy, even at 160 today, will hit a way higher number. And so will Bitcoin. But at some point, do those returns from Bitcoin, MicroStrategy, dampen to a point where IV isn't as high, and you can't collect such premiums. And is this just a special moment in time that it's like you got to capitalize on this over the next whatever it is 5 to 10 years, which is a long runway. If someone again you were able to accomplish this in such a like relatively short amount of time, there's basically like two period. If this lasts for another 10 years, there's still like two periods where you could still run this if you really stick to it and get that early retirement.
Yeah, and it's funny that you mentioned Tesla because I know we like to repeat there's no second best all the time, but I recently did adjust my portfolio to about half strategy, half Tesla, and the thesis is very similar. Um, and I probably took some liberties with my Bitcoin only uh, philosophy. Like Tesla was one of the first companies to really buy a bunch of Bitcoin. And one of Mason's criticisms was, well, they've only ever been a seller since then. They've never really added to their stack. So you could argue whether you want to call Tesla a Bitcoin company or not. They own Bitcoin and a sizable chunk of it, right? Um, so obviously, I'm using that as an excuse to being willing to hold them. I guess if they sold their entire stack, I'd have to reconsider that position. But my thesis on Tesla is actually exactly the same as strategy. They're disrupting and they're the clear winner. And so, uh, between those two companies, I almost kind of feel like I don't need to look anywhere else for the next 20 years. And by then, literally nothing will matter. Like it just, whatever the world looks like at that point, as long as we're holding some Bitcoin, we'll be fine anyway. So that's kind of where my head's at. I'm not like actively. There could be better risk adjusted opportunities out there.
No, I think you chose the top two.
Yeah,
I think
like
bringing up Tesla is a bad example on my part, actually, because that's probably the number two. I would say maybe there you still like the reason I even just separate Bitcoin and MicroStrategy is because like it's like with Tesla, you still have the key man risk, right? What if something happens to Elon? What if the stock like it has a lot of there's a lot of hype around it as well. Sometimes it really runs away, and then you get these analysts that come out and say, oh, it's super overvalued, and you get all these short sellers, so that could be a problem. But in terms of, okay, what do we really believe about the future? What can we be most certain about maybe in the market? Yeah, those are, probably two of the companies that you're like, okay, I have a really good sense of where this is going. I'm willing to like, really stake my ground on this.
yeah, one of the things that I think about strategy that I'm not really too fussed about a lot of the bears arguments, and it's hard to argue with them over the last year because they've got the scoreboard. They can just point to the scoreboard and like you see that, right? Like strategy's been going down ever since they came out with the pref strategy. So we kind of have to just like sit on our hands and wait until we win, and then we not necessarily dunk, but um, if everything comes back around, I think the long term thesis is really no different than when people trade Bitcoin on leverage, right? So if your net asset value, because you're a Bitcoiner, is 1x MNAV because it's Bitcoin, then you already know, and this has been true ever since Bitcoin has existed, that the only way to outperform Bitcoin is to leverage buying more Bitcoin. And so if you're going to spend, 100 grand on Bitcoin, it goes up 2x over some period. Okay, you turned 100 into 200. The only way to beat that is to like, okay, I'm going to buy 100 grand, but I'm also going to borrow another 100. And then when it doubles, now I've made 400,000. I can pay off the 100 I borrowed, and now I've doubled my returns. And so it's kind of like the simplest understanding of the only way to beat Bitcoin is to leverage Bitcoin purchases. And that's exactly what strategy is doing. So yeah. And even if they trade at 1x MNAV forever, the fact that they're buying Bitcoin at a discount to Bitcoin's CAGR means that the 1x MNAV will go up more than Bitcoin for as long as they can remain a company and implement this strategy. There are some third-party risks. I mean, anything can happen with, the country could turn around and be less, uh, friendly to Bitcoin or Bitcoin treasury companies. And it's a lot easier to attack a company than it is Bitcoin itself, right? Because we can just put our 12 seeds, words in our head and go to South America or, anywhere in the world that we want to go, and we can just fire up a node and we're good to go. But, companies are exposed to, local laws and all kinds of things. So there's a ton of reasons why you wouldn't want to own a stock over Bitcoin, but Bitcoin is always going to trade at 1x Bitcoin, right? And
Mhm.
so if you're not an experienced leverage trader, and you could get liquidated, right? If you're not trading, if you're not borrowing on leverage responsibly, right? Then you can get liquidated and you have nothing. If you believe that this company can leverage their Bitcoin purchases more safely than you can, then I think it's reasonable to just go ahead and, buy shares of this company and let them do it. Because, some people will argue, and I've had some of these private conversations, that if you want leverage Bitcoin, you can just buy Bitcoin ETF leaps, right? You can expose yourself to whatever amount of leverage you want, but you also have to manage that position.
Mhm.
You have to understand, okay, what strikes should I get? What expirations should I get? The fact that it does expire, you can lose that entire position. Whereas, something like just buying Bitcoin itself has no expiration date. And, strategy has proven itself over cycles that, even when they were much more leveraged than they are today, even with encumbered Bitcoin, they didn't get wrecked. And I
Mhm.
see these preferreds as being like way safer than the strategies that they were using previously with the convertible bonds. And they've never had encumbered Bitcoin once they got rid of that. I can't remember if that was Silvergate or somebody, but they never did that again. And as far as I can tell, they'll never make that mistake of encumbering their Bitcoin as long as I'm alive. So as long as they do that and they don't actually put the Bitcoin at risk, it seems like it's a no-brainer.
Right on, right on. And now that you've won the game the second time around, you're retired. How has your strategy maybe shifted? Is there anything you've simplified, removed, or just become more conservative about now that this is your primary source of income, and you wouldn't necessarily be able to afford making some of the earlier mistakes that you made or
Oh
that you
no,
talked about?
I repeated most of those mistakes all through 2025. Well, I guess I made the same mistake, but I took a different path to get there. And so, 2024, I probably got the overconfidence bug again. It was like, okay, Bitcoin, all the treasury companies are printing. We know the Fed has to print. We know nation states are buying. We know the number of Bitcoin treasury companies is increasing daily. And it was like, this is the moment when we get the Godzilla candles. We're going to a million. There were so many calls for a million in 2025. And they didn't really happen. And I kind of got, I was a big gamer when I was younger, and still am. I still love games, but I love the patterns. Like, if you play any of these old arcade games, you could kind of get into a rhythm or a pattern, and the movements were very similar. You know what I mean? If you just juke left, juke right, juke right, juke right, juke left, you're good to go. And as long as you once you figure that out, you could just get high score. And so when I saw that Bitcoin was like falling into this 4-year cycle thing, it was like, okay, that was very appealing to me. I like having sense being made out of chaos. And so I got a little bit suckered into that, I think a little bit, and decided that I was going to put a lot of leveraged calls into assuming that Bitcoin would meaningfully get all-time highs in 2025, right? We got 120, 125, whatever it was, but it wasn't like euphoria. It wasn't, and it didn't really, it just left this kind of unsatisfying feeling. And then, of course, since it didn't really moon, the Bitcoin treasury companies just suffered big time. And so I made a bet that 2025 would be a great year for leverage, and that absolutely did not happen. So, all of those obviously expired worthless. All of the June, July, 1080s, they all expired worthless. So, gave a bunch of money back to the casino in 2025 as well, but for kind of a different reason. And so now I'm rebooting a little bit and thinking, okay, the 4-year cycle theory is dead, right? It just didn't happen. And so that means, so what did happen? Did we get an abbreviated cycle and now we're in the bear market? Or is this a pause in the middle of what we, for no lack of a better term, call it a super cycle, right? Maybe we'll get an extended cycle that lasts 5 or 6 years. And because of all the catalysts that we talked about before, the insane money printing, all of the deflationary pressure that AI is going to cause, that the system has to inflate enough to hide all of those benefits to society. Like, deflation cannot be allowed to present itself, right? That would just tank everything. So they have to print and create enough inflation to hide these deflationary pressures. And so with all that being said, it leads me to really to those two paths that I mentioned, and really either one of them means that we're going higher in 2026, 2027, because either it was a 3-year cycle and we've already suffered through half of the bear market and it's going to be bull time again, or it was a bull season the whole time and we've just been kind of crab walking for the next leg up. So this could be throwing good money after bad, but I'm basically just going to call it being a year early, and I'm going to run 2025 back again in 2026, 2027, assuming that it's going up forever, Laura. And, um, that may or may not go well. But the only thing that I'm going to try to tweak this year is I was a little bit too irresponsibly long last year. And I'll adjust my ratios, right? I got wrecked with Tesla when I had 75% of my portfolio in poor man's covered calls. So this year, maybe I'll have 10 or 20% of my portfolio in poor man's covered calls. And if we get another bad year, it won't be enough to just completely wreck the portfolio. So, yes, once you get to a point where you don't need to win, you just have to make sure you don't lose. It does change that philosophy from an irresponsibly long one to like a more responsible semi YOLO.
Yeah, definitely one follow up there, but also wanted to just add on to something you're saying there because you're mentioning, okay, we know the and the beauty with it, you're talking about this as like a game as well, which it is gamified in a sense, but we know at some point Bitcoin is going to make its run back. Like it's not like it's not going back to 100,000 again, right? It's not like eventually it's not going to climb to 200 and make sharp moves along the way. And so as that happens, and can't speak to all the Bitcoin treasury companies, but at least again, MicroStrategy has proven, since they've adopted this strategy to at least be the one to be most correlated with Bitcoin at a more predictable ratio. And so, we're expecting Bitcoin to make this move at some point and MicroStrategy to follow. What if it's not 2026? So what if it's not 2027? And what if it just happened? If it's 2028, 2029, which would typically align more with the 4 year cycles? And so, I mean, I just maybe put back to you in terms of like we kind of talked about earlier, um, kind of planning for those, different scenarios. And maybe if you had like, it actually doesn't even take that much more patience, 'cause it's like 1 more year, 2 more years, then like, you know, you could potentially again get those life changing returns. Whereas like if you're playing options and you play it wrong, even by a couple months, by a year, it's like night the outcome is night and day. And so are you thinking about maybe adding in, planning for a 2028 or 2029 scenario and saving some of that capital so that you could, you know, for sure be able to live during those periods as well?
Yeah, I don't really have a I don't really have a dry powder strategy. And I think it's from the Bitcoin mentality of like all the cash is a melting ice cube. And so I literally try at the end of a trading day, try to make sure I have almost no buying power whatsoever. Now, the little scraps, like, let's just say that for me personally, $10 a share is the smallest stock that I try to own 100 shares of. So if you've got $500, that's not going to be enough. So I have started, instead of just leaving it in cash, I've started buying some of the prefs. So either a stretch or a SATA, and letting those kind of just sit there. And if it sits there for a month, maybe I earn 1% on it. Or if it's trading below par, maybe it goes up in share price as well. I've started doing something like that, but I really, I really am just to the point where I hate cash. Just holding US dollars just seems ridiculous for almost any reason. So if I do want to take some off the top, when those events happen, I'll just rotate into something that's not worthless, like a paper dollar. Uh, but but yes, to answer the question even more directly is absolutely, this doesn't have to happen in 2026. It doesn't have to happen in 2027, right? Bitcoin can do whatever the hell it wants to do and does not care what my contract expirations are. And so absolutely, it may not come this year, even though I'm crossing my fingers and hoping that it does. Yeah, it'll be the year after, or the year after, or the year after. It's really just a waiting game, and you don't have to be in the market like I am, right? You can just do the dead man's portfolio thing. You can just buy Bitcoin and wait. As long as there's no black swan event specifically with the company, I think you can probably just buy strategy and wait. Like it's fine. However, I will say that option selling, if you decide that it's a strategy that you want to do into perpetuity, it can be an investment type strategy. It's not like day trading where, the guy logs in, he has all cash position, and he's got to make some money that day, right? It's not like that. It's way more high frequency than just buy and hold, but as a mechanical um strategy, I think it's much more long term of a strategy than people think about. They think options, oh, this is YOLO gambler. This is, people buying long calls thinking that the stock price is going to go up 20% next week. And that's the opposite of the average option seller's philosophy. It's like, no, we're just going to let these small wins every week or every month aggregate and multiply over time. And over years, it turns small wins, they aggregate into, you know, sizable chunks. And yeah, I think, no Bitcoiner has ever lost money holding it for 4 or 5 years, right? I think the same will be said over the next couple of decades for strategy. I know there's a lot of heartache for people who FOMO'd in at 400, 500 a share, and being down sucks big time. But over, 4 or 5 year periods, another cycle, whatever, it's bound to turn around, unless some kind of unforeseeable 6102 attack, or these things you should put in your valuation model, right? If you think there's a 1% chance that Strategy's Bitcoin gets stolen, and you think that Strategy should be worth 400 a share, okay, 1% chance that it goes to zero is, okay, maybe it's worth 396, right? There's ways to implement or include all of these bearish claims into your valuation model, right? Let's just, list all of what the bears say can happen to Strategy's price, and then assign a percentage that you think will, that they could happen, and then just deduct that from whatever you think the fair price is. And, that would be a representative of, how bad could Strategy get. And it's still a numbers game at that point. You're still kind of gambling, but anything that's built on Bitcoin, I think, is much less of a gamble than any company that doesn't own Bitcoin. It's kind of that simple for me.
Gotcha. And now, taking into account all that you learned during your multiple cycles, looking back at 2020, 2021, everything you've talked about that happened there, and again now 2024, 2025, as you're in retirement now, and again, this is your primary source of income, what mistakes would you say are important to avoid and that are like this time around, non-negotiable for you? And so you can continue to maintain the lifestyle that you created for yourself.
Sure. As an option trader, we already mentioned one is a position size, but number two is liquidity. So if a stock doesn't have the volume, it's usually easier to get into a trade than out of it. So even if you win that trade, right? Stock's trading at $10, you buy the $15 strike, the price goes to 20, 25, you're like, yay, me, I made a bunch of money. But if there's no open interest and nobody wants to buy that from you when you're trying to sell it for a profit, you're just stuck in that position, right? I mean, you can wait for it to expire, and then you could end up exercising that position. But liquidity is extremely important. And again, the stocks that are the most liquid are the strategy types, the Tesla types, things like that. There are probably some very undervalued stocks that are in the whatever sub $5 range. But if you're an options trader, it's very hard to get any premiums there. So I think making mistakes by getting sucked in by the premium that you can collect, but not realizing that the liquidity is going to lock you into that position and you can't even exit a winning position is a definitely a something that new traders should be worried about. And then of course the position size is also a huge problem.
Gotcha. And would you say, is there something that you think, really should work in theory, but, ends up consistently failing in practice for most people because either emotions or some other sort of constraint?
Yeah, buy the dip. Anything outside of Bitcoin, you can't just apply buy the dip universally, because there's one company that comes to mind. It's called Nikola, and they chose that name specifically because of Tesla, right? They wanted to be the next EV company. They were super cheap. They had a SPAC. Can't remember what year that came in, but the premiums were insane, and it rocketed up. Their IPO, it rocketed up to, it was close to $100 a share. I think it was at least 70 or 80, up from like $10 a share. And then when it started to come down, if it dropped from 80 to 70 and you bought the dip, and then you bought the dip at 60 and 50 and 40 and 30 and 20 and 10, you ended up not being able to buy the dip anymore because the founder went to jail for fraud and the company's not even listed anymore, right? I think that guy actually ended up getting pardoned recently. But regardless of whether he was guilty of fraud, he was convicted of it. And buying the dips doesn't work if that company just goes down and stays there. As Bitcoiners, we're not worried about it because we know it should go up forever. But it's a big time. It's dangerous in anything that's not a derivative of Bitcoin, because the buy the dip strategy doesn't work if that company's just on a downward transition and stays there forever.
Mhm. I love it. Yeah, that's a excellent point there. We didn't get too much into the Greeks and stuff like that. We're talking a lot about your option strategy here, but I'm curious, just to cover that as well. Are there any of the Greeks that you maybe pay attention to more than any of the others that matter more? And then also, are there any other like just mental models that you have that you actually think matter more than any of the Greeks and are more important to employing the strategies that you use?
Sure. A lot of people always want to know, what delta did you sell, right? Okay, I'm selling a covered call. What delta? They always want to know what strike is the best strike. And I don't think that there's any theoretical advantages necessarily to the 10 delta, the 20 delta, the 30 delta. I think the market's pretty efficient at pricing them. So I don't really care so much about delta. As long as you're selling a covered call and it's out of the money, meaning there's some distance, there's some potential call away value between the current price and the strike, right? There should be some amount that you should capture there. I don't really sell in the money covered calls. Josh Mandel actually made a bunch of money doing that um, after the euphoria in November, but that's like super trader level, and I'm just not capable of really predicting those types of moves. So I don't really look at delta like I'm just in love with the 30 deltas or anything like that. What I would what I want to make sure that my account is doing at all times is have a positive theta, which means that I'm selling enough covered call premium to make sure that more money is draining into my account over time, even if the price of the stock stays flat. Um, and so, even in the case of the poor man's covered calls, you're going to have a negative theta drag on that long call, right? It's decaying every single day. The covered call strike that you sell against it has to be draining a little bit more into your account than out of it. So there are safe ways to structure a poor man's covered call. I really like the calculation from, I think it's called Blue Collar Investor. They have a formula for how to structure it safely so that you don't get wrecked to the upside. But yeah, so as an option seller, you have to have a positive theta. That's basically the number one requirement. If you don't, that means you're an option buyer, right? Because you're losing more money every day if the price of the stock doesn't go up. So that's really the only real criteria is that if you're an option seller, you should have a positive theta, and you can slide that and be willing to only collect a little bit of premium, and that seems to be the 10 delta Hermes Lux strategy. I don't know if you've seen him posting, but he loves selling the 10 deltas. So he's skimming a little bit off the top, but he's also leaving a lot of call away value that if the stock goes way up, he's really not missing out on much. And that appeals to some investors, and some people will just sell like very aggressive at the money covered calls. There's a guy, I can't remember this guy's name, but he's a hell of a character on YouTube, and he's always talking about, I'm just trying to collect the juice. That's what he calls collecting premium. He calls it the juice. And he's a little out there, but like he seems mechanically to be like doing things well. Like it seems to be making money, but um guys like that don't care if the stock goes up, right? These people might not even believe in Bitcoin. They don't care about strategies of philosophy. They just know they can collect a just metric butt ton of premium, and that's all they care about. Um, those are two extremes, and I think they're both fine as long as they meet your personal expectations. Um, but yeah, I guess because I am bullish, I also want to have some positive delta exposure, means which basically just means that you're more long than you are short, right? So I want to be bullish because otherwise, why am I even holding that position? So I do want some positive delta, and I want a positive theta. And if I'm satisfied both of those criterias, I'm happy with my structure of my portfolio.
Great. And are there any other mental models outside of the Greeks that you actually think matter more than these two criteria you laid out?
Yeah, this is one of the big lessons I think from the Tasty Trade research that they've done and the philosophy is that um, they did a bunch of back testing on when's the perfect days to expiration to sell a covered call or a cash secured put. And according to their research, for out of the money options, right, is about 45 days to expiration. And so that's not really a theoretical edge because I said I don't really believe in theoretical edges, meaning one delta is better than another. However, this could be considered a mechanical edge because um, the reason why we buy leaps is because theta is so small, right? It's a melting ice cube, but it's melting very slowly. Under 90 days to expiration, it starts melting a lot faster. At 60, it's melting even faster. And so, according to their research, 45 days to expiration for out of the money options is when there's maximum theta acceleration, uh, maximum decay of theta, right? And that does pretty much last for the remainder of the life. And they will try to roll that position every 2 to 3 weeks. And the reason why they do that is because under about 20 days to expiration, even though theta is still continuing to accelerate, the decay is continuing to accelerate, you start becoming at more risk to gamma. And so if you want to think about what happens to an option at 0 days to expiration, like 3:59 p.m., right before the market closes, right? Gamma is either the stock is in the money and gamma is 1 because now your position is going up dollar for dollar with the position, right? You're in the money, you won. Excuse me, if you're a buyer, you won. If you're a seller, you're losing dollar for dollar. But gamma is at its most extreme right before expiration, and if it's out of the money, it goes from 1 to 0, right? It's either in the money, it's 1, or it's out of the money and it's worth jack, right? And so the closer you get to expiration, you're exposing yourself to gamma risk. So they like to exit those trades or roll them when it's 20 to 24 days to expiration. So there's kind of a sweet spot in there of selling out of the money options at 45 and closing or rolling them after 2 to 3 weeks. And so I think there's a little bit of a mechanical advantage that you can give yourself. And so the corollary to that is going to be if under 60 days is the options selling sweet spot, why the hell am I buying options under 60 days? If the option sellers are like making a living off of me doing this, why wouldn't I buy options that are 90, 180, 360, 720 days into the future? That's the point of buying. As far as out as you can afford, they're going to get more expensive. But the more time you give yourself to be right, I think, is flipping the option seller's mindset backwards, right? As an option seller, I want to sell when theta is accelerating. As an option seller, I want to be buying things when theta is very tiny.
Yeah, lines with I think the title of that book you brought up earlier, trading the
Trade the
trader.
trader.
Yeah.
Yeah, he
Um,
wasn't an options guy. He was more of like a day trader guy. And it was a very good book, but I think the main lesson there is understanding that you're trading against other people and they have psychology and emotions that they're dealing with, and you have to really understand kind of like what they're going to do in response to the market.
mhm.
It's less of a technical analysis kind of thing, um, and more of just understanding that the market is irrational and they're going to do certain things regardless. Eventually the stock probably wins out, right? What do we call it? A voting machine in the short term and a weighing machine in the long term. I think if you have a long enough time horizon, it does turn into a weighing machine. But in the short term, you have to understand that people are emotionally invested in their personal cost basis. Um, so yeah, that book wouldn't necessarily help you with an option strategy itself, but it is good to understand how other people think in the market.
Gotcha. Yeah, and now with all of these experiences you've had, how is trading options, being in the market, taught you other things about, life and maybe business as well?
Oh man, about life, huh?
Because you've been through a lot. I mean, this is like, I don't think people understand how much of a roller coaster like this is.
Yeah, I think I guess believing in yourself and giving yourself time to be right matters. Like even just for podcasting, right? I think there's a statistic that says that most people quit after like 90 days. And so it's kind of just like not quitting. If you if you're right, it might take a long time to be right, right? So you should probably give yourself way more time than you think, right? Don't just say, "Oh, I'm going to podcast for a year," right? Or don't just say, "Okay, I'm going to own this stock for 1 year." Like anything can happen in a year. But if you just don't quit and your thesis is correct, then good things will happen. So I think that's good news for you because you're already got a higher level of production value than I've had with my 500 episodes or whatever. So I think big things are in store for you, and I'm excited to see
Oh
where this
man,
goes for you.
you're too kind. Really, really appreciate you. But no, I think that's a really good lesson there. To just to make sure you stay in the game, and yeah, it definitely applies to the trading strategies that you mentioned as well. It's sometimes just about staying in the game, and again, thinking of a Bitcoin or a MicroStrategy. What if it is 2028 or 2029? Like you don't want 2030 to come around and say, hey, like if only I didn't make those mistakes in 2025, 2026, 2027, I would have had the capital that, would have led to these life changing returns if, I just waited those extra years. So totally hear that. I love that point. We can't close this without talking about, we got to hit on AI a little bit. I'm curious how you're thinking about it as it relates to the markets and trading as well. So, yeah, do you think there'll, or not do you think, but how do you think, AI will sort of change the edge for individual traders and investors in the market?
It's going to be so hard to imagine what's going to be happening because we already know we're trading against these AI algorithms and bots, and it's like if you think about it that way, you're like, well, I have no chance. But then again, it's like, okay, well, the bots are trading against each other as well. So does that just come out in the wash? Right? Like if something gets overvalued, all the bots are going to figure it out and knock the price down. And then if it gets undervalued, okay, the bots are just going to knock the price up. So in that sense, maybe we'll just get the same amount of volatility we've always had because these these AIs are only as good as they were trained to be. And if they're getting trained by humans, maybe they have all of their the human flaws built in as well. So it does scare me a little bit that I'll just get out traded by a machine to a certain extent. But at the same time, if Bitcoin is if Bitcoin treasury companies are building on top of a Bitcoin balance sheet, that's the only thing that can't be disrupted, right? So if you're making chips, someone can make chips better, faster, or cheaper than you. If you're making cars, somebody can make things better, cheaper, or faster than you. But if Bitcoin is perfect money, then there's no way to disrupt it if you're stacking sats. So that's kind of the way that I think about AI. And in the sense of the software, I think it is a bubble. And I'm a huge fan of Jeff Booth. And sometimes I even describe myself as like a Boothian Bitcoiner, or like a Jeff Booth disciple. And the way that he describes what I think I'm thinking about this is people used to buy calculators, right? When I went through um, trig and calculus class, I had to go and buy like $100 freaking calculator,
Right,
graphing
right.
calculator. And now we all have them for free on our phones. And so the line of code you know, to write that calculator app costs almost nothing. And we just assume it should be free forever. And so he likes to say, what's the cost of a line of code writing a line of code? It's even less than zero, or like less than a penny, right? It's almost nothing. And so eventually we're going to have all the most powerful AIs that people pay a service for now. It's just going to be all free, like a calculator app on the phone. And so I don't really see there being all of this return on investment as far as AI software is concerned. But for physical products that use them, I think maybe that's where the money is. So you're still always going to be able to, you're always going to need chips, right? And then maybe you make robots that have the chips inside them, or like Tesla, those are wheeled robots. And eventually, he's going to have Optimus and a bunch of walking robots as well. So I think the real disappointment for AI investors is going to be thinking that the software side is going to make a bunch of money, but it has to go to zero because of the marginal cost of production is where the price goes. And if the cost of production is zero, then the price of that software goes to zero. But the physicalness, I think, maybe isn't a bubble. And so I think that's probably an important distinction. And I think Adrian even said one time, like, he thinks energy will be money in the future, like maybe after Bitcoin. I don't know if that takes 500 years or whatever, but maybe we'll just get rid of proof of work altogether. And it's like, okay, we're trading energy as money. Like here's a few joules of something for, I don't know, a ribeye steak or something. But until that happens, I think Bitcoin's going to be as perfect money as we're going to get in my lifetime. But AI is going to return an insane amount of value to the world. I know it's going to put a bunch of people out of work, but and this is go back to a Jeff Booth thing again. So if you lose your job to AI, whatever you were doing, whoever you worked for, now can charge less money for their product because they're producing it cheaper, which means the customers that buy that product have benefited. You know what I mean? So it's like at some point, almost everything becomes free. And I don't know if we get into a UBI situation or, what is like Star Trek days where everybody can just get food out of a freaking replicator. I don't know when we get to those levels, but it is going to be just an infinite benefit to society as long as it doesn't turn into Skynet and enslave us all or whatever. But yeah, it is going to be good in the long run. And I think Bitcoin probably came around at the perfect time to save us from like an AI apocalypse. I'm at least hopeful of that, because if you have AI built on fiat slavery, then it's infinitely more efficient at enslaving us. But if we can build AI on a system where we have honest money and everyone is trying to deliver value, then our future, I think, looks a lot brighter.
Hmm. Oh, great points there. And is there something for yourself, either personally or in your, as a trader, as an investor, that you would, never outsource to AI?
Never outsource to AI. Interesting. Huh. So usually, my son is like, he wants to just run everything through AI. And I use it to make doing research faster, but then I argue with it. So I guess I would never outsource the decision. So go and do some research for me, maybe even make it argue with yourself, like, argue with itself, right? Take the
Right,
pro
right.
and take the con, and then you can have it come to a decision. But then at the end of the day, I I just feel super uncomfortable turning it loose and making it act autonomously. I still want to be the guy that says yes or no. Um, I know there's some people that build trading algorithms, and you could do it, I think, very easily with an option selling's perspective, right? You could just easily say, uh, you could pick a delta that you like, 10, 20, 30 delta, and you could just tell it to keep attempting to roll that position until you can't roll it for a credit and then just let the shares get called away. You could probably code that. But I would be very hesitant to let AI just make decisions for me. Do research, give me all the pros and cons. But at the end of the day, I want to argue with it and challenge it. And sometimes me and AI have to agree to disagree. Sometimes Grok and I get into it, and they're just like, no, this is how it is, and despite your assertions, blah blah blah. And I'm like, nah, I'm not buying it. And then I
Yeah.
kind of just go my own way. So
But it's great that you're still getting that other perspective, and it's something you're now thinking about. And with your son, for example, how do you sort of instill in him these different things you're talking about in terms of how to use AI maybe in a more appropriate way that's more so facilitating learning, and isn't making you like relying on it. You mentioned that he wants to use it for everything. So sort of what sort of things do you communicate with him to get him to use it most appropriately?
sure. I mean, luckily, the main thing that I kind of was concerned about, he was already doing, so that's kind of good. Um, and what he was doing is he was not only prompting it for the question that he had, but then also saying, and also like list your sources and fact check the sources and give me like a confidence level on where you got this information from. So he's building in like he's making the AI second guess itself and provide that documentation. Like, where did you get these sources from? You know, are you asking a very politically charged question and you're giving me the sources from, the left or the right? Like, that's important to know. And so I was kind of impressed that he was he was doing some of those things, but yeah, it's still a little scary that your immediate thought for literally everything is just to ask AI. Like, um, like okay, so we were doing some stuff with the DMV, right? To register his car and stuff, and he's asking AI, and I'm like, well, the AI has to just go to the frickin' DMV's website, and you're trusting AI to properly interpret that. And I would say it was largely correct, but I'll just go to the DMV's website. It's going to list the crap that I have to take. You know what I mean? I'm not asking AI to go to the website and tell me, like, I can go to the website just as easily. So there's a couple of things like that AI almost kind of ends up being, if getting the answer is so simple that you can just get it yourself quickly, it almost ends up taking longer because now you have to trust this intermediary to interpret the information correctly. So um, yeah, I would say that for those types of queries, it doesn't really matter. But when it comes to like political things and there's going to be a lot of charged emotions, is that AI going and sampling? Are they a left or a right leaning AI? Like that is kind of important, I think. And that kind of brings me to a little bit of suspicion, right? I told you I exited my Facebook app because that place was just insane. Um, I'm a little bit more optimistic about X. Elon says it's maximally truth seeking, blah blah blah, but it's still a centralized thing. And I just got onto Nostr recently, and it's not as satisfying of an experience, but at least I know I'm not being controlled or pitched and like being manipulated by the algorithm. So I'm hoping that more Bitcoiners and even non-Bitcoiners will end up on Nostr, and we're gonna have to have something that positively identifies us because AI can take both of our images from this video right now and make us do and say anything. And so we're going to have some kind of encrypted way to identify ourselves and make sure that, Charles and Soleil really said the things that Charles and Soleil said today. So that's got to be on the horizon. And I think Bitcoin has to be integrated with that because we're probably going to need that much hash power to prevent people from impersonating us using AI. So I think Bitcoin's going to solve that problem at some point as well.
Gotcha. Okay. Well, we'll park the AI for now. And as we sort of come to a close here, wanted to sort of bring it all together. I'm curious, and I'm sure a lot of our viewers will be wondering this too, as you've shared. You've been generous sharing your story today. But what new problems appear once the financial pressure is gone? You had this strategy in mind. You put it to work. You had some bumps along the road, but eventually you made it. But yeah, what if any new issues or just problems appear after the financial pressure is gone?
What do you mean by financial pressure?
Just to make money, right? When you're first starting out, it's like, okay, like you want to get that, like you want to get that 70 to something else, much higher number. And so you're grinding day to day, week to week, doing different things. For other people, maybe they're, working a job and investing a little bit here and there. But once all that's gone, once you've made it to the other end, I'm curious, outside of once financial pressure is gone,
Yeah.
what's kind of what other dragons maybe pop up?
Yeah, that's actually probably the most important question because you have to figure out some way to deliver value. Um, Especially as a man, like you have to go out there and slay dragons, right? You can't just do nothing. I mean, once you get old enough, you can prop your feet up, but I think at my age, that can't be what retirement means. So there's a there's a half dozen different business ideas that I have, some from very boring to some that people would think might be a little bit freaky and weird. So, like, let's start with boring, right? So, I've really tried to increase my carnivore uh, diet, habits, and I would say it's probably more meat based, right? I've done strict carnivore for maybe 30, 60 days at a time. Um, and I think probably and the keto way is probably going to be end up being I think probably the best choice for most people. But you can't go anywhere out to eat and find it, right? There's nobody that's like GMO free, pesticide free, meat based restaurants. So I thought, okay, if I want it, maybe some other people want it too. So I've thought about opening up some kind of like meat based carnivore restaurant where even if we're going to make something with flour, we're going to get it from like France or something where they're not using glyphosate or just some really, really good food that also tastes good. Like I don't want to be eating, just, struggling to finish a meal because like, oh, I think this is good for me, but it tastes like crap. Like I want it to taste good. And I also don't want to cook it. And I also don't want to have to clean my plate after. You know what I mean? That's the fun of going out to eat, right? Is you just have somebody bring you food and you get up and walk away and everybody has to deal with it. So that's kind of like the boring thing that kind of gets on my mind. But and this goes back to my anarchy roots is one of my guilty pleasures is watching like these uh first and second amendment auditor type folks who go out there and test the government's um understanding of what our constitutional rights are, and sometimes they end up getting arrested or whatever. Um, and there's some police agencies out there that have demonstrated a glaring lack of even like legality, right? I think they just came out with a study in Tennessee, maybe specifically in Nashville, but there's thousands of innocent people that were arrested for DUI. Just 0% blood alcohol, 0% drugs in their system. They were just trying to meet these quotas that they said didn't exist. And so I thought, what if we could start a company that was almost kind of like investigative journalism, but would go to these very, like, some of them get actually kind of famous. Some of these police departments have a ton of corruption, and just like form an actual company that goes out there and does this instead of having like these guys that just show up with a freaking sign or whatever and kind of like antagonize someone until the police show up or whatever, like actually create a business that holds police agencies accountable. And I don't know, you'd almost kind of like have to trick them into arresting you so that you could sue them and collect a bunch of money. But like, I don't know how much money a company can make off of lawsuits, but that would be something that, imagine building some kind of Bitcoin treasury company on top of something weird like that. I think it would be a service to society and make it a freer one. Um, but that's like, when I'm walking the dog and I'm just fantasizing about sticking it to the man. I
Mm.
think of shit like that.
Yeah, no, that one definitely sounds really really impactful.
Yeah, I like the sound of it, but in practice, it was like, okay, what's the business model? Like, I'd literally have to win lawsuits or something somehow. And really, if it was impactful, you would be like making your company go out of business.
Yeah.
Because if you actually cleaned up all the corruption, now there's nobody to sue, right? So now I have to go out of business because I achieved my goal of cleaning up the freaking corruption, and now my company's worth nothing. So
Yeah. And does this fit under, I can't tell, does this fit under like the boring category or
no,
the more
that was the
quirky?
out there. I'm kind of out of my mind for even
Oh,
thinking about this
no,
kind
no,
of thing.
that okay, no, I don't think that's yeah, I definitely don't think that's like super out there or weird. I mean, you definitely identified a problem and the impact piece. Yeah, maybe it's just solving for what you're mentioning there at the end. How do you stay in business over a long enough period of time? But cool. And so more reflective, but looking back on these different experiences you've had as well, if you had to compress everything you've learned just into a simple set of rules, what would they be?
I would say the central philosophy, the safest way to trade is what Tasty Trade preaches, which is reduce your cost basis for an increased chance of success. Because the average trader probably just sucks at it, right? You're gonna pick losers. You're gonna think, oh, I'm gonna buy Nikola because it's cheap and it'll be the next Tesla, and then it'll just go out of business, right? So if you can constantly reduce your cost basis, you're going to increase your chances of success. Now, if you're a Bitcoiner, you can pretty much throw that out the window and you can just YOLO Bitcoin, and it's going up forever, Laura. Right? I mean, I'm not a financial advisor, so I can't give financial advice, but that philosophy kind of applies to trading. And if you're just going to stack sats, you really don't need any trading philosophy. You just stack as many as you can. And when it goes up, the next time it hits 200 or 300 or 400 or 500, you can trade that not for money, but for something that improves your life, right? Previously, you couldn't afford a house. Now you can buy a house. Now your lifestyle improves. Before, I didn't never thought I'd be able to afford a family. Okay, wow, you know what? I've got a really solid financial base here. I can pop out a half dozen kids now, and I can just YOLO a bunch of kids, right? Um, I think that's kind of the point of stacking sats, not to just stack them forever and die on a giant pile of Bitcoin. Like, just you're going to live like a monk and never enjoy life just so that you can have had this pure stack sats mentality. Like, that doesn't really make any sense to me. So the whole point is to make your life better, make the world better, not just stack sats for no reason. So I would say that if you're going to be in the trading game, you want to lower your cost basis. But if you don't want to play that game, you can just buy Bitcoin and live your life and enjoy yourself.
Yeah, to that point you were discussing there as a follow up, what does enough mean to you now, whether it's a target number or like a sort of target lifestyle? Like when, will you know, okay, I'm not just going to keep trying to maximize how much I'm able to make on this trade.
Yeah, that's my personal demons because I'm a gamer, so I'm always trying to get high score. I can't stop really, I don't think. And even Grain of Salt mentioned something like this. It's like the millionaires want to be 10 millionaires, and not necessarily because they want more money, but it's like whatever they're doing to get that money is fun, right? So if they're in the business of buying businesses and selling businesses, like, do you just want to stop doing that? Like, you enjoy it, you're making a bunch of money doing it, but whatever drives you, you don't want to just stop doing it. So I don't really think that there's okay, I have enough, except in the fact that people say, well, how much Bitcoin do you really need? And for me, the answer to that question personally is I want to have enough that if all of the fiat stuff did just completely disintegrate and I needed to get out of the country and sneak off to South America or whatever, I want to have enough Bitcoin as a parachute, right? So that means that if my Bitcoin stack is my parachute, I can literally do anything else I want in life, and I know I can't get completely wrecked, right? So whatever I'm doing in the stock market could completely go to zero as long as I have my parachute, right? My golden parachute. I think for me personally, that's how much I need. And as long as I have that safety net, I can just enjoy doing all of the other things that I enjoy doing. And in that sense, like, it's never enough. Like, how much value do you want to deliver to humanity? There's no limit to how much you want to contribute. And the fact that the free market means that you are rewarded for value, I think there's going to be a new mindset, because in the past you delivered value so that you could get money, and now it's going to be, we have the luxury to just deliver value, and people are just going to reward you with money. So you're getting this, it's the same, you're delivering value and collecting money, but you're doing the value first, you're front loading the value and then getting paid on the back end. And I think that's going to be a really good mind shift. And I'm really, the reason why I'm so preoccupied with health now is I just want to live long enough to see what the world looks like on a Bitcoin standard. And the world has been at war over fiat for thousands of years. And if I can just live long enough to see Bitcoin clean this thing up, I think I can die happy after that.
Hmm. Wonderful. And we talked about a bit about some of the mistakes you made, and we went into detail about things you'll look to avoid in the future. But just curious, throughout this journey in investing and trading, what's the one habit that you would say has been most important and has mattered the most to your success?
Mm. The habit that has contributed most to success is interesting. Man, that is a tough one. The habit that has led to the most success.
Yeah, some people might say meditation. I'm not sure if you're a big meditator, but
You know what? It probably is habit forming, and I think there's a little bit of a risk nowadays of like getting into the self-help space and then reading book after book after book about self-help and never implementing any of it. And one of the books that helped me the most was called Atomic Habits. And there's um there's a premise in there that you want to get a little bit better every day, right? So um the example that they give is this guy that was going to be in charge of Olympic cycling for, I think it was Britain or whatever. And they were trying to get like just a little bit of a percentage better every single day, to the point of like bringing pillows with them on trips because they could sleep more comfortably. And they were just maximizing, I think, even like the skincare, so because you're gripping this bicycle handle, and like they're just working on every little teeny tiny thing. And with a couple of years, they were winning the Tour de France. I think I said Olympics, but it was actually Tour de France. Um, and so, Atomic Habits I think is the one thing that really helped for me, and you can apply it to anything, right? So if you want to be posting on X, you just make a habit to try to do that every day and see how many, days in a row, how many streaks you can get with the podcasting. How many can I do? Can I do one a day? That was actually the very first year that I started doing my shows. My goal was to do one a day, and I didn't take days off. I didn't even take off Saturdays and Sundays. I think I did maybe 350. I allowed myself to take a
Wow.
couple of weeks off for vacation, so I did definitely over 300. And now I basically just post. I do my shows Monday through Friday when the market is open. But getting into that habit, I think, was extremely critical, and you can apply that to every area of your life. So, and actually, it directly correlates to the option selling philosophy because, am I going to get 0.5% this week, like every week, right? You got weekly expirations or monthly. Okay, I'm going to get this percentage premium on my positions per month. Those type of habits, I think, really meld very well with the option seller's perspective. And I think habits are extremely important. Um, and I think you asked me like what kind of habits are important, but it might be more so just creating the ability to even control what your habits are. Can you minimize your bad habits and maximize your good habits? I think that's probably extremely important. Um, and don't get stuck in the trap of like reading dozens and dozens of these self-help books and not implementing any of them. Now you're just kind of like on this self-help treadmill and you're exactly where you were. So find something that's worked for a lot of people, like maybe Atomic Habits or like something else. Read the damn thing and implement it. Give yourself a year of two, and then like if it doesn't work after that, then you can quit and pick up another book. But um, pick something up and stick with it, and before you quit too soon.
Wonderful. And to close out here, what's one piece of advice you would give to your 25-year-old self?
Oh God, 25. Um,
I figured that was kind of like a sweet spot age.
yeah. So 25-year-old self would be like, okay, you want to figure out what you want, right? That's everyone's like, okay, I want to figure out what I want and then I can go get it. But it's too hard. It's too hard to figure out what you want or what you want to do. It's a lot easier to figure out what you don't want. So I would make a list of things that you don't want in your life and try to uh, get those things out of your life and do whatever it takes to avoid those. And then once you've done that, whatever's left over, pick something from that. Yeah. So it's, um, there's well, I'll leave that one there, but then I'll give a little bit of relationship advice maybe as well. I think at 25, you probably are not experienced enough to know what a crazy woman looks like. So, date enough women until you can figure out which ones aren't crazy and then pick one of those. But until you've got that much experience, yeah, man, you're just flipping a coin, dude. You gotta figure it out first, man. And I know we're all want enough Bitcoin that we can get girlfriends, but
Wait, sorry, we're all what?
we're all trying to get enough Bitcoin to, to
Oh.
get a girlfriend. But it doesn't work that way, man. You'll screw it up if the only thing she wants is your Bitcoin.
Yeah, it's
You'll
not
have zero
good.
sats before you know it.
Yeah, talk about the Bitcoin later, not on the first date.
Yeah.
Yeah,
Talk about the Bitcoin never. She can get her own
right.
12 seed recovery phrase.
Absolutely. Well, wonderful, man. This has been great. So awesome catching up and hearing more in depth about your story and everything. Congrats on all the success as well and everything you're doing. Super excited to continue to see where it's going to lead, and I'm sure our listeners are really going to enjoy this one. So thanks for doing
Cool, man.
this.
This has been a lot of fun.
Awesome. All right, man. Take care.
All right.